Uncertain times mean volatility in the stock market, and some investors are turning to ETFs to help keep their investments safe. Joining us now with 7 ETF stock picks for 2025 is MarketBeat analyst Chris Markoch. Chris, we have seen quite a few swings recently in individual stocks, where even some of the largest companies out there might see a 20 or even 30% drop before coming back up again. How can ETFs kind of help avoid some of those dramatic swings?
By their very nature, ETFs are designed to smooth out volatility in the stock market because instead of investing in one specific stock in one specific sector, you're investing in a basket of stocks that might cover one specific sector or a slice of the entire market altogether. By their very nature, they're designed to smooth that out so you don't get maybe as high highs, but you don't get the low lows either.
Very good point. And I think for some investors, that is the appeal of ETFs. Now, you've put together a really diverse list of 7 different ETFs. I think it's
Right.
important to mention there are endless ETFs out there, so many to choose
Yeah.
from. Let's go ahead and get started on your first pick of an ETF that's going to help beat volatility this year.
Sure. The first one that I put on the list was the Vanguard Total Stock Market ETF. The ticker symbol is VTI. The reason why I chose this one was because this is really truly a set it and forget it ETF for somebody that's looking for exposure to the broader market and they don't really want to think too much about specific sectors. The fund covers at least 99.5% of the total market capitalization of over 3,600 US stocks. You're getting full coverage of the market. As you would expect, the performance of the fund should track very closely with the performance of the S&P 500. In 2024, it did exactly that. The S&P 500 was up 25%. This fund was up 26%. The difference in the percentage was probably due to the fund's dividend yield, which was about 1.07%. Truly a set it and forget it fund. It's going to give you the coverage you want, and it gives you a low expense ratio. The expense ratio is only 0.03%. So you're not going to be losing a lot of those profits to fund expenses.
And that sounds like a very safe, no brainer choice if you're looking for a safe way to start investing in ETFs. Let's move on to your second ETF pick. It's a little different.
So the next pick I have is the Energy Select Sector Spider Fund, ticker symbol XLE. A lot of investors hear about this every day. Energy stocks have been one of the worst performing stocks in 2023. They were supposed to have a turnaround in 2024. That didn't really materialize, but a lot of investors believe 2025 is going to be the year for energy stocks to emerge strongly. This is a fund that helps, again, give you broad exposure to that market. It's had a total return of about 48% over the last 3 years, which really isn't that terrible when you consider how the sector's gone overall. It's got a dividend yield of about 3.6%, and that's impressive, but that's pretty typical of energy stocks. And once again, the fund has a low net expense ratio of just about 0.09%.
Yeah, that is pretty low. And this is a hot topic for a lot of
Yeah.
investors. Lots of people are interested in investing in energy stocks right now. We talk about it here on this channel. We also have a free premium report out right now on 7 nuclear energy stock picks expected to have a very strong 2025. You can scan the QR code or click the link in the description of this video to get that free report on marketbeat.com right now. Chris, let's get back to ETFs.
Sure.
What is your third pick for an ETF expected to help beat volatility this year?
One way that investors will want to address volatility is through dividend stocks. But dividend stocks can be confusing for some investors because some will look at the dividend yield, but that's not always the best way to buy dividend stocks. Some will look at the total payout, and again, but it depends on how much you're paying for a stock. The better approach might be the iShares Core High Dividend ETF. Ticker symbol is HDV. So what this does is it gives you exposure to high quality US companies that pay out obviously great dividends. The dividend yield of the fund is approximately 3.6%, so that's considered a high yield. It provided investors with a return of about 24% in the last 3 years. That's not really going to excite a lot of growth oriented investors. But if you're looking for exposure to dividend stocks and a way to capture the extra income that you can get from dividends, this would be a good play.
All right, from dividends to another industry that many investors are excited about in 2025.
So we're looking at the Vanguard Financials ETF. The ticker symbol is VFH. So one thing that's happening in times of volatility is some investors look at financial stocks. And one of the reasons for that is because bank stocks will tend to do well, even if inflation's rising a little bit, even if interest rates are a little high. Bank stocks tend to be a place that investors can go to and count on that smoothness that we're talking about. Not too high, not too low. That's what this fund does. The fund's top two holdings are JP Morgan Chase and Berkshire Hathaway. You really don't get much more solid than that. These funds, they might not deliver the market beating returns. They're going to deliver solid returns that are going to beat bonds, beat cash, and that's what you're looking for.
While banks may be a safe bet, what about investors who are looking for a little bit more growth? Let's talk about this next ETF pick.
Yeah, this is one that's been getting talked about quite a bit, and it's the iShares Russell 2000 ETF. Ticker symbol is IWM. Small caps are one of the areas where a lot of analysts are looking at very closely. There was a lot of excitement when the Fed started to cut interest rates at the end of last year because small cap companies generally rely on more debt to fuel their operations. So they're more sensitive to higher interest rates. But when interest rates start coming down, these stocks can start looking more attractive. We don't know when the Fed is going to be cutting interest rates this year, but what we do know is that their next move is likely to be down. And so this might be a good time to position yourself in the small cap sector. And rather than choose between a number of small cap stocks, the fund gives you the exposure broadly to the entire small cap sector.
How
Correct.
much more growth or returns could this ETF get rather than some of the other more strong and steady ones that we've already talked about?
The whole idea is that small caps tend to lead market recoveries. If you look at the 5 years ending in February of 2025, the fund delivered a total return of around 50%. That's not considered high growth for a lot of investors. At the same time, if you look at when the market was coming out of slower times, small caps have tended to lead the way, and the same has been true with this fund.
Well, for slow and steady investors, 50% doesn't sound like that bad of a return.
Exactly.
If you are looking for more of a large cap pick, we also have a recent video we talked about with 7 large cap stocks expected to take off in 2025. Make sure to check out that video after you're done watching this one too. Okay, Chris, let's move on to our next ETF pick.
For some investors, they have a portfolio and they're very well covered in US stocks, but they may not be covered in international stocks, and particularly emerging markets. So I have a pick for them, and it's the JP Morgan Beta Builders Emerging Markets Equity ETF. It's a long name. Ticker symbol is BBEM. The importance and the significance of this ETF is what I just said. It gives international exposure. China and India are the two countries that have the highest exposure in this fund by weight. Technology and financial stocks also make up about 50% of the fund's individual holdings. What you're really looking at is a fund that's going to give you broad exposure to technology stocks in particular in China and India, without, again, the fundamental risks that might exist if you try to invest in any of these stocks individually.
And are there many other ETFs out there like this that kind of give you that more international exposure?
There are, and you can just basically look for, emerging market ETFs. One of the things that I liked about this one is this has only been publicly trading since 2023, but it's already got a return of approximately 12%, and it's already got over $915 million in assets. Once again, you really want to watch the expense ratios on this, and this has a net expense ratio of 0.15. So it's not going to cost you that much in terms of fees to be in a fund like this, and you've got some potential upside.
All right, Chris, let's get to your 7th and final pick in our list of ETFs to help beat volatility.
One of the best performing asset classes in 2024 was gold. And I know a lot of investors, they don't want to hear about gold. But it's something that if you're not invested in precious metals, now might be a really good time to do it. The thinking is that gold is going to go over $3,000 an ounce at some point this year. Silver may even do better than gold on a percentage basis. This is a fund for you. The Spider Gold Trust, ticker symbol is GLD. It is 100% invested in gold. So if you're looking for exposure to silver and some of the other precious metals, there are other choices. This one's 100% invested in gold. The whole idea is you're going to get correlation to the price of actual physical bullion. So as that price goes up, this fund's price goes up. It's a good way for investors to get exposure to the price of gold without actually taking on some of the issues that are involved with physical custody of the metal, like you have to make sure it's secure and things of that nature, and reselling it. How do you do that? Again, if you're looking for exposure into the precious metal sector and for gold in particular, this is a good choice.
Yeah, if gold had such a great year last year, I imagine this ETF had a fairly good return for 2024.
It's done very well over the last 5 years. The total return is up over 73% over the last 5 years.
A very good pick to round out the list. Chris, thank you so much for walking us through these 7 ETFs that could help you beat volatility with your investments this year. Thanks again for watching, everyone. Make sure to check out some of our other content. You can find plenty of different stock picks right on our channel, especially in the economy tab. Thanks again for joining us, everyone. And as always, happy investing.